there's plenty of institutional buyers around. There's plenty of people setting up, as I say to people. It all takes time, and people are coming slowly into the market, but this macro backdrop's not helping. So you just kind of have to tough it out. I mean, that's what this thing is all about, right? Crypto is all about that. Bitcoin itself, using the monthly logarithmic chart, I think it's pretty close to 2 standard deviations oversold now. I'm just doing the chart. Unfortunately, I can't show it on my screen, but I'm just going to have a look. So the 2 standard deviations oversold tends to be where this stops at maximum. 1 standard deviation, this is where we got to in March 2020, is roughly where we are now. So March 2020 got to here. The sell-off after, in fact, it's never really been, it never really goes down much further than this versus its logarithmic trend. So we're kind of in that zone, but that's what we're kind of saying anyway, which is, 30,000, at worst 20,000 would be, the final bloodbath level. Who knows? But, again, the idea of this space, if you're looking at network adoptions, I don't trade the space. I never have. I just look at it and say, I want to own the long-term trend. The long-term trend of adoption is going higher. I see no reason to change that narrative whatsoever. So you just keep dollar cost averaging.
Hello and welcome to Money Talks. In today's video, macroeconomic expert and CEO of Real Vision, Raoul updates about the recent trends in Bitcoin's price action, chances of a capitulation event in the crypto space, along with a macro analysis on different assets, including cryptocurrencies, precious metals, and stocks. Make sure to stick around till the end of this video where Raoul makes a prediction about the next phase of the crypto revolution. So without wasting any time, let's dive right into the video.
Looks like crypto, as I said, is going to get hit further, and it's going to come a bit lower down. And I think it's still within the broad range that we've been in since March. And I think that's okay because it looks like the networks are pretty stable, i.e. network growth is stable, they're not falling, they're not growing. It is what it is. That narrative turns around if the inflation narrative and growth narrative turns around. If not, they're just weak within this big sloppy range. And I don't see anything to change that yet. Like no instant event. There's plenty of events on the horizon that can change that. There's at the margin, the Bitcoin physical ETF, if and when that comes, ETH 2.0 merge, if and when that comes. There's a bunch of things. There's interest rates falling, if and when that comes. All of these kind of things will start changing narratives within crypto. Meanwhile, crypto is basically just a churning of the same capital within the crypto ecosystem. So capital that was going to leave has left. So it's a churning of capital, which is where NFTs have been a place where people have made money because that's within the ETH economy. It's a separate economy. It's outside of the US dollar economy. Right. People tend to go into the ETH system and don't leave. And so they tend to look at NFTs or DeFi and other stuff and rotate around. And that's what's happening now. Anybody who thinks they know the outcomes is lying. We're all trying our best to figure it out because there is a lot of moving variables. Now, am I generally in the right direction or generally in the wrong direction? These are the 2 schools of thought that are out there. And that's why I'm really looking forward to the next 2 weeks, because I've sat down with some unbelievable people and asked friends of mine to go and sit down with some other amazing people. So we're going to get as many views as we can to try and piece this all together. And after 2 weeks, I don't think there'll be one answer, but I think people have a better view of what's really going on. Yes, it was an amazing event. The FTX SALT event. I mean, everybody in crypto was there. I mean, literally everybody. I couldn't walk 10 feet without bumping into, all of the kind of favorites who've been on Real Vision. Amazing. Nobody really talks about price. Everybody is in the build phase. It's really interesting. So crypto goes through 2 phases. One is price, when everyone talks nothing but price. And then when the price or the network kind of is less interesting, people focus on building. Now, crypto companies raised 32 billion in VC last year. So everybody there is seeing what's happening in tech and everything else, and they're immune to it. Now, the crypto token prices might go down, but they're immune to it in terms of their businesses. So what they're allowed to do, they've timed it perfectly in the capital that they raised, is they're able to now, they've all got the capital they need to build the next phase of the crypto revolution. And they're all working hard. I mean, everybody from people building out derivative marketplaces to NFT stuff through to, the people at Solana building out all of the future of Solana network. All of them are there, all of the building stuff. People like FTX, awash with cash, building out the future of the entire integration with TradFi and DeFi. So fascinating. And people are breathlessly exciting. It was literally like speed dating every half an hour, another meeting, another meeting, another meeting, another meeting. Yeah. Because people are so busy and everyone's trying to partner with each other to do so many things. So it very exciting. No hubris about it either. There was no kind of, there was a bit of champagne and yachts, but not really. That was just Novogratz. But generally speaking, no hubris, just heads down. How are you? Busy. What can we do together? It's great. I love it. The key point is transition phases mean maximum uncertainty. What do markets hate? Uncertainty. I think it just continues downside for a while. I don't think this is an end of the world event here. I think it's a recalibration, and I've started to buy, growth names. I'm starting to get very close to pulling the trigger in bonds, as I think the narrative will change. Real interest rates are essentially the difference between the interest rate and the inflation expectation. So when you look at that, 10-year bonds are currently at wherever they are, 2.9%. That's roughly in line with where 10-year inflation expectations are. So i.e. real yields are zero. Now, in a structural economy where we've got an aging population, massive debt, all of this stuff, you tend to see real yields negative for extended periods of time. Europe has been that way for a long time, as has Japan. So what it's telling you is as real yields have got to zero, we've kind of choked off the economy. In a more functioning economy like India, real yields can be positive, i.e. yields more than compensate for inflation. But in these kind of aging, mature, indebted populations, it tends to be the opposite way around. So what you need for gold wants to see an environment where money's being debased, and therefore real yields, financial repression is underway. Financial repression is a way of saying that your savings are being reduced by inflation every year. So therefore you want to buy gold. So that's gold, crypto, technology stocks tend to do very well in that environment. So gold was supposed to be the inflation play. We've had inflation, gold's gone nowhere. Gold has been much better when the central banks are debasing the value of the fiat currency denominator, which tends to be a period of negative real rates. So I think that is the key element here.
Raoul Pal says that global markets are locked in a mass liquidation phase, and he doesn't expect a turnaround in the short term. He believes that no matter what's in your portfolio, more pain is likely in store. For now, Raoul Pal cites the US dollar as the only asset that may remain strong. According to Raoul, this is an ugly market, and what he thinks is going on here is there are two factors for the market to digest. One is inflation, and that created the market to set up in certain ways. Everyone's crowded into certain things. Then growth starts evaporating, and you can see it all over the place in stuff like consumer discretionary stocks. You can see it in the forward-looking indicators. So the market has to deal with inflation plus slowing growth, and what that basically means is everyone's hit the liquidation button, so everything's getting liquidated. And this will hit everything from crypto to pretty much everything. Paul predicts that both inflation and growth will move lower simultaneously in the months ahead. If his outlook comes to pass, Paul says growth stocks, gold, and crypto may ultimately stand to benefit. According to Raoul, interestingly enough, gold and growth stocks tend to do badly as real rates start tightening. But they got to zero, and it looks like the world's falling apart just as the central bank is trying to undertake quantitative tightening, or at least no quantitative easing. And if that's the case, then real rates are going negative again. And that's usually good for gold, crypto, long end of growth, that kind of stuff. And bad for everything that people have been in, like commodity stocks. So what do you think about Raoul's comments on Bitcoin's price action? Tell us in the comments. Also, don't forget to like and subscribe. See you soon with the next video. Thank you so much for watching.